Hey, listeners, it's Paul Andriola here. Why not join our community at Small Cap Discoveries, where we offer our members direct access to some of the best microcap investment opportunities available? Our members are getting access to premium microcap financings, research reports, and direct access to management. Sign up today at www.smallcapdiscoveries.com.
Hi, everyone. Welcome to the Small Cap Discoveries conference call. Today is October 23rd, 2025. And today on our call, we have the CEO, Duncan McCready from IC Group Holdings. IC Group trades on the TSX Venture Exchange under the symbol ICGH. The company is currently trading at 46.5 cents with about 33 million shares outstanding, or about a $15.5 million market cap. I'd now like to hand it over to Paul Andriola.
Hey, Trevor, thanks a lot. Duncan, thanks for joining us today. Just saw you a couple weeks at the conference, so good to see you again. Now, I think we've known each other for about 3 or so years. I know you guys just went public almost a year ago, I guess, give or take. Now, public company, probably not super well known amongst the microcap community, so happy to have you on here to get you a little bit better known. So Duncan, listen, I'm going to hand it over to you. You got a presentation deck. Why don't we just jump into it?
Super. Thanks so much, Paul. And yeah, I think we've known each other probably at least 5 years. Our discussions went back, and yeah, we as an organization just went public in February of 2025. So happy to be here. Really excited. We have a great story to share, and we've got some great momentum, and we're driving a real sustainable growth business that's focused in a market that's ready for disruption. So I'm excited to share our story, and I'll jump in right away here. Obviously, everyone's aware of forward-looking statements, and we have this in our presentation deck, so you should be familiar with it. At the core of our business is a really simple but is a powerful truth, and that is that brands that engage their consumers win. They drive more revenue, they build stronger consumer loyalty, and they gain more long-term market share. The average return is about $6 to $8 for every dollar spent. That's why over 50 of the top 100 global brands and over 90 professional sports teams have partnered with us to engage their consumer audiences at scale, to convert attention into action, drive purchases, repeat visits, referrals, and ultimately first-party data, which is liquid gold to brands. We've accomplished a lot since we went public at the beginning of the year. We drove 51% revenue growth, of which 95% is organic, reaching $12.5 million in revenue in the first half of 2025. Annualized revenue is $25 million. We increased our annual recurring revenue to about 69% of revenue. We landed a 5-year contract extension with the world's largest technology brand. We landed 2 SOWs valued at up to 10 million Canadian for the rest of 2025 and 2026. We've expanded our customer reach into 10 new countries, including China. We've grown the number of mobile messaging delivered from 500 million just over a year ago to over 1.5 billion messages, all of which reinforces our product market fit of our solutions and the trust we've built with customers to engage their audiences. This gives us great visibility and confidence as we move into 26 and beyond. We operate in a really exciting space. It's a $560 billion marketing technology industry, and it's growing at 20% annually, really fueled by demand for data marketing, automation, AI, and consumer engagement. IC Group is really uniquely positioned to unlock value through first-party data, gamified engagement, and commerce activation, especially in the live event and fan engagement sectors, where the market demand is really starting to surge. We also see a lot of significant M&A opportunities in the sector, especially as the fan engagement market grows in the sports and entertainment space. Our journey began in 1989 with a really bold idea. It was $1 million hole-in-one competitions. From there, the business scaled into large-scale prize promotions for Fortune 500 brands, pioneering high-impact, results-driven campaigns. By 1997, we launched one of our first internet-based promotions in the industry with PepsiCo, driving commerce and data. Over the next decade, we grew to 120 employees and ultimately sold the company in 2006. In 2015, I led a management buyout, buying back 100% of the businesses and took over as CEO. In 2017, we acquired a 14% stake in a fan engagement platform alongside the True North Entertainment Group, who owns the Winnipeg Jets and the Manitoba Moose. By 2023, we expanded further with the acquisition of a mobile messaging business. In 2025, we completed the acquisition of the remaining shares in the fan engagement company, consolidating our ecosystem and our vertical integration. We also went public at this same time, making a new chapter of growth, scale, and global opportunity. From real-time fan engagement on live events to sending over 1 billion time-sensitive mobile messages annually, or executing engagement campaigns across 20 different countries at the same time, we simplify the complex task of connecting with consumers at scale in markets around the globe to drive sales, capture valuable first-party data, build loyalty, and manage risks. In July, one of the world's largest tech brands awarded us with 2 contracts valued up to 10 million Canadian, and they extended our master service agreement 5 more years to 2030. This was a really strong endorsement of the value we deliver and the trust we've earned with massive brands. We're a single integrated business built on 3 proven revenue streams: digital promotions, mobile messaging, and insurance solutions. Together, they power consumer engagement at scale and form a unique platform that few, if any, competitors can match. H1 was a strong quarter for us, or a strong half of the year for us. It extended our momentum from last year, and it grew our annual recurring revenue, which gives us good visibility and predictability for the remainder of 25 and into 26. As I mentioned previously, revenue was up 51% year over year to 12.5 million for the half. Our mobile messaging business grew 97% during this period, all of which was organic, which again signals really strong product market fit and customer demand for our solutions. Annual recurring revenue reached 69% of total revenue. This is a 10% improvement over the same period in the prior year. Our gross profit increased 28% to 5.7 million, which reflects a gross margin of 46%. With our growth rate in the first half, our contract extensions, and 69% annual recurring revenue, we remain on track to deliver growth targets for 25 and beyond. ICGH powers audiences and commerce across digital and live experiences through our proprietary platforms. It combines gamification, rewards, social, data, and loyalty. All of our solutions are typically deeply integrated, driving long-term client value and retention. We're an ISO 27001 certified company, which really states we're enterprise ready, and we're trusted by global brands. We generate revenue in this space through 3 sort of mechanisms. The first is long-term service contracts, driving professional service fees. The second is SaaS revenue and activation fees based on some of our platforms. And the third is commissions based on rewards and incentives that we drive in consumer channels. As of June, we generated about 5.7 million in revenue with a gross profit of about 65% in the specific channel. As you can see, we serve a strong and growing client base that includes leading global brands, professional sports teams, and major live event operators, all trusted partners who rely on us to deliver high-impact engagement solutions. This is an example, 3 different examples of different engagements that we have. On the left-hand side, the DraftKings, that currently runs in X, or formerly Twitter. It's basically based on what we call is a trend genius. It's a listening campaign that listens for different trends or sports outcomes within a social channel and delivers an activated offer down to a consumer to drive engagement and ultimately to drive commerce for the brand. So in this case with DraftKings, we issue out an offer that if they download the application and bet $5, they get 300 instantly. The second example is Microsoft Ultimate Giveaway. This program was embedded in Bing Search, Microsoft Store, Xbox, and across various social channels. It ran in 7 different jurisdictions, and we awarded a $1 million prize. The purpose of this was really to drive engagement with their consumer audience and ultimately drive first-party data on their behalf. The last example, it was with the World Juniors in 2025 in Ottawa. And this example, our FanX platform ran in the live event venues, interacting with over 150,000 fans, capturing valuable data during the event. As I say, ran in 2 different arenas at that time. We're currently operating on the biggest stage in sports right now, as I'm sure all of you are cheering for our Blue Jays. The Blue Jays utilize our platform to help orchestrate fan engagement in their Rogers Centre Stadium. And as I say, we're on one of the biggest stages in the world right now. When we operate in these environments, there's no room for error. And it just speaks volumes to the lessons we've learned in activating over 10,000 of these activations and live events as big as the World Series. Mobile messaging, which is really a highly effective channel for audience engagement and commerce. And the reason it's highly effective is open rates are over 90% when you receive a mobile message or a text message versus email, which is sub 5%. We're the only one of 3 tier 1 aggregators in Canada, which means we have direct carrier connections to all the mobile carriers in Canada, like Rogers, Bell, TELUS, and there's a total of 13 in total. And we're also the only solution where we fully host all the data and process all the data in Canada. We view this as a growth opportunity, particularly in regulated industries, given the political environment that we're currently operating in. As you can see, our messaging gateway is utilized by a really broad base of Canadian and international customers looking to reach Canadian consumers. In 2025, we'll deliver up to 2 billion mission-critical messages across security, commerce, and marketing, generating recurring revenue per message at scale. So the way we earn revenue in this space is we earn revenue on every text message that is sent through our system. So currently our business model is really focused on securing high volume SMS traffic and then introducing new messaging solutions that generate higher margins over the longer term. Just past year, Apple adopted rich communication services. This is really a game changer for the industry, as mobile messaging is really entering a new era of rich, interactive, cross-platform communications. And this expands opportunities for us as a business. You'll see, for those that don't know what rich communication services are, you'll see kind of 3 examples up here. On your left-hand side is just plain SMS, which I'm sure everyone's familiar with. Often if you're trying to log into a bank account, you'll receive 2-factor authentication. It comes in through 160 different characters on a SMS message. To your right of that is called MMS, is multimedia messaging. And in this case, you can start to introduce logos into the communication. It's more graphical. And then the one on the right-hand side is rich communication services. This is where we can start to embed logos, graphics, video, links, all sorts of different ways to improve the consumer experience. So what's happened is RCS was a Google product, or is a Google product, and it was offered through Android devices, which really is 30% to 40% of the market in North America. And when Apple announced in June of last year that they're going to start embedding rich communication services in all their operating platforms, and now gave 100% access, or almost 100% access to the market, which meant for brands is now they had a full platform that they could deliver rich communication services through to. So what you're seeing in North America right now is you're seeing all the carriers and all the aggregators like ourselves ramping up to start delivering this type of service. It's starting, the wave is starting to happen in the US right now, and it's slowly coming into Canada. So we'll see more of this kind of transition in 26 and 27. But it opens up the door for some really exciting new communication strategies with brands and their end customers. The last pieces are insurance area. As I mentioned before, this was the actual founding piece of our business back in 1989. It really enables commerce and fan engagement at live events. And that's kind of what we're specialized on for both sponsors, teams, and operators. As a Lloyd's MGA, we hold binding authority in 60 plus different countries, but we actually carry no financial risk exposure. We have the ability to underwrite, price, and sell insurance solutions. But as I say, we actually don't carry the financial risk. Brit, which is owned by Fairfax, is one of our lead syndicates in our underwriting facility. So currently we service clients in Canada, the US, the UK, the UAE, and Australia. And how we generate revenue in this space is we generate commissions on gross written premium, service fees, as well as profit commissions based on the performance of our portfolio. Here's just 3 examples of how we apply insurance. We work, as I mentioned, in the live event space. So we provide event cancellation, event liability, terrorism, and other related products for sports, concerts, festivals, and conferences. We also, kind of the roots of our business were around prize promotions. So enabling bold, sort of high dollar value promotions. In this case, you'll see Celebrity Wheel of Fortune. We would underwrite some of the large prize pools associated with games, TV shows.
Cameron Winklevoss, Commerce Secretary Howard Lutnick and his family, the Adelson family.
Sorry, I've got.
What do you make of all of this happening?
Folks, do you want to check make sure all your mics are muted? We got somebody with an unmuted mic here. And Trev, I don't know if you can mute everybody, but it'd be appreciated. We'll just edit this piece out.
Right.
There you go.
Thank you.
Perfect.
Thank you.
Sorry, Duncan.
And then no, that's all right. Thanks, Paul. The last piece is our contractual bonus. And this is really ensuring, performance-based incentives for athletes, teams, and or consumers. So, a simple example is ensuring a tennis star if they, win certain tournaments. A consumer-based example would be, if the Blue Jays win the World Series, brand X is going to, give every consumer that purchased their product, $1,000. So that would be, reversing kind of how that model can be applied. And the reason why we use these tools is really to help drive consumer engagement, to push them into commerce channels as well as to capture valuable data. So it's a very powerful kind of secret tool that we leverage in a lot of the programs and campaigns that we offer for our customers. So in terms of our growth initiatives, we have 4. We're really focused on opening new messaging channels, as I spoke about. Apple's commitment to RCS messaging unlocks a major growth channel for us. So we're really focused on enabling that capability over the next 12 to 24 months. And other channels available to us, like toll-free and MMS in Canada, that will drive a more annual recurring revenue for us at different margins. We're also very focused on reaching more live audiences beyond traditional sports like hockey, and that's already underway. We've made some great progress with some recent wins in the horse tracks, conferences and exhibitions, curling and basketball, both in North America and in Europe. We also have some really interesting emerging use cases like private celebrations, which really could drastically expand our market opportunity. So, this is a really interesting space for us. We're looking for, key partnerships that can embed our solutions into their partner channels. So it's as I say, it's a good growth opportunity for us. We are also looking at how we leverage AI and new technologies. Obviously, it's a big area of opportunity. We currently use it primarily for enhancing our operations and improving efficiencies. A key initiative for us is really to push to extend our use to commercialize innovations in this space that really drive customer value and improve our financial performance across our different business segments. And finally, a big push for us, and Paul and others have been hugely helpful, is IC Group has been the best kept secret for far too long. So we're really excited and energized to share our story, to engage broader audiences and the investor community. And this is really starting to become part of our DNA and who we are. So we're really excited by the opportunities ahead of us in 2025 and beyond. And we have the team and the technology and the experience really to drive and capture those growth opportunities. This provides kind of a quick overview, which Paul mentioned, or Trevor mentioned at the beginning. We have about 33 million shares outstanding. I think the price is down at 46 or 47 cents today. So the market cap is a little lower than what's listed here. Some of our debt obligations, we have senior debt of 8.2, of which 1.8 is the mortgage against a building we own in Winnipeg. And then we have some debenture debt from our original FanX purchase when we concluded that purchase in 2025. And that's all I have at this time. Can I open it up to questions, Paul?
Absolutely. Let's do that, Duncan. Thank you so much. Reminder, everybody, if you've got a question you'd like me to ask Duncan, please use the chat function and we'll do that. A couple things that came to mind right away. There lots of things going on. So I imagine there's lots of different sort of versions of competitors, but maybe give us a sense of the competitive landscape. How would you define your competition right now?
Great question. So we, some of the competitors in the fan space, for example, fan engagement space, they are focused on deep experiences within a specific team or venue. Our kind of approach to the market in this space is developing a highly scalable product that is networked together. Our platform is, we call it a multi-tenant platform. In other words, we can onboard a customer in a very short period of time. But what it also enables us to do, if all the various venues and operators are open to it, we're able to enable a brand to promote across venues. So now you can have a brand like a Coca-Cola or a Pepsi or someone like that who wants to run across multiple venues at the same time. They can leverage our platform and our tool sets in a highly effective and efficient means. On our insurance side of our business, we are very unique and niche. There's not very many of us in the world. and we often work together to share risks. So that piece of the business is pretty unique and different. On our mobile messaging business, as I say, we're one of three in Canada. The other two aggregators were privately held companies as well. They got acquired, call it 7 to 10 years ago. One by Cisco Systems, the other by a company called Cinch, and a European company. So obviously large companies acquiring these aggregators, which we see as an opportunity. But there's a technology part in terms of creating moat. And as I say, there's only been 3 aggregators probably for the last 14 years in Canada. The other fact that we're process and hold all our data in Canada is very different from the other 2 aggregators.
And Duncan, again, I mean, I always got to remember you get so many different facets of your business, but when it comes to like the sales model, the sales process, how do you go and get your customers?
Great question. So we have a couple different pathways. First, we have a huge referral business, particularly actually across all our businesses. On the fan engagement side, it's a very small community, and you have to earn your trust. So it takes years to be able to operate in a live event venue and gain the trust of those professional teams to operate in that space. So even those teams compete on the field, they don't necessarily compete in terms of their venues. So they often share best of breed partners. And that's, a big part of how we've expanded, not only in that space, but also in our engagement space. The insurance space is also, because we're unique and different and we're very niche, we work with key brokerages around the world. And once they, latch onto you as an area of expertise, they leverage it across their network to help their customers. So most of it, we do have a sales team. We have a team of 7 to 10 people focused on different sales of our business. But for the most part, our business is driven by referrals and just strong performance.
You went public in February, like you said. How much money did you raise at the time? And maybe we can jump into sort of the go forward financials here. How much money did you raise when you went public?
We raised about $1 million, 1.2. We did it through an RTO. So there was, call it $1.5 million in the RTO, and then we raised another 1.2, and then we had some debt conversion at the time as well.
Gotcha. And then refresh my memory. I think it's $12.5 million in revenue in the first half. Was that the right number?
That's correct.
Give or take. Yeah. What sort of gross margins do you see in that revenue right now? What does it look like? What do you think that gross margin profile looks like going forward?
So the gross margin right now is about 46%. As I say, there's different lines of business. Our insurance business is 65 to 70% gross margin. Our engaged business is up around 70%. Our mobile messaging business is around 20%. And the reason for that is, as I say, our strategy on that is a bit of a land grab strategy in terms of driving volume and gaining customers, which we've been doing, and then introducing new streams, new channels into that space. So going forward, we'll continue to, we're really focused on recurring revenue, and we're really focused on integrating technology into our solution sets. We've been strong operators for years, and driving good margin to the bottom line is really important to us. So that's something we'll be focused on, and so we'll start to see improved margins going forward.
And which part of your business do you think is the fastest growing? Like what should we watch for to really see the growth in this business?
I think it's going to come over a couple steps. So you'll see a lot of growth in 2026 in our mobile space. It grew like 97% in the first half of the year organically. Our engagement space, our ICGH space, grew about 30% in the first half of the year. So that's where you'll start to. That's what you'll see in 26. Going into 27, you'll see a lot of growth on our fan engagement side, as we acquired that in basically February. So we're working on some integration strategies, and we expect to start to see traction, greater traction than what we already are seeing in that space happen in 2027. When we acquired that business, they had about 60 teams. Right now, we're about 90 teams. So that's 30 teams in the span of, I don't know, 6 months, 7 months. So it's pretty good.
And you've made an acquisition in the past. Do you see M&A as a big piece of your business going forward? And if so, what would you be looking for?
Definitely. This space, there's a lot of opportunity for sure. It's not a roll-up strategy for us. But we will look at opportunities to acquire new technologies or businesses that are accretive, obviously, to our business and provides a strategic growth opportunity for us. So there's, as I say, there's lots of opportunities. We've seen lots in the pipeline. When we find the right one, we'll look to invest if we can. So.
And what sort of keeps you up at night right now running the business?
Great question. Getting our name out there and getting awareness of our business. We have a great business. So it's building liquidity with our shares, getting volume up, getting our story out there more to the investor community. That's really what keeps me focused. I have a fantastic team that delivers really well. They have really deep experience working with some of the best brands in the world. And when you do that and you work in the environments we work in, your skill sets really get honed, and you can do amazing things. So the opportunities are for us to take, and I just want to make sure the investor community is coming alongside us as well.
And what gets you excited the most about the business? Is there products or direction or any new initiatives that get you excited right now, or and above anything else?
Well, the push into rich communication services is really exciting. It's not just about our business, but the whole industry. The whole industry is going to face change here, and the opportunities for brands and consumers at the end of the day is really exciting. If you think about rich communication services, and you layer that into the live event space that we're operating in. I mean, if you go to a Blue Jays game, everyone's got their phone out, right? So you tie those two things together, it creates some magic, and that's what's really exciting for me. I think we'll see some really good and exciting growth in that space over the next year.
33 million shares outstanding. Maybe give us a breakdown of kind of the ownership, what the insiders own, and kind of give us a sense of what the shareholder base might look like outside of the insiders.
Right. So I mentioned, so the overall group is fairly tightly held. It was privately, probably somewhere in the neighborhood of 71% in terms of insiders, 70% of insiders. That's starting to change. But that's like when we went public, that's what it was at. A lot of that is myself personally. I own 33% of the business today. We also, the Cuspis, when we did our RTO, there was an investment group with Cuspis Capital that came in, obviously. And there was, when we did the initial fundraise, it was a fairly small group that invested at that time. It was a very different market going back, when we started into this. So our opportunity and our goal is really to expand the number of investors in this space, and that's what we're out doing.
Mm-hmm. And do you feel comfortable you've got the resources you need to push the business or strategy forward? Capital, people, anything else you can think of that you might need going forward?
Yeah, I mean, for me, I'm always looking for great people for our organization. I think great people can make a huge difference in any organization. So that's something we're constantly looking for, and other great technologies and stuff. From an investment or capital perspective, that's something that we're always eyeing on to see what the right when and the right time to do that is. So that's something we're always actively discussing with our board and our business leaders. But right now I'm pleased with our progress and kind of we've made some huge strides in the first half of the year, and I see that continuing going forward.
And relatively new name for a lot of microcap investors. Do you think anybody out there right now gets it wrong, or is there what should the investor base really understand about this investment opportunity?
Well, I think I can take a spin at that one. The business itself has three real growth drivers. In understanding each component, they all have their unique facets to the business. The really neat thing about IC Group is its ability to pull levers on all three of those to generate new revenue streams, or grow the revenue streams that we have. With the mobile business itself growing at the pace at which it is, it could stand alone as its own business as an attractive investment opportunity for investors. You compound that with the ICGH and the FanX, which generates a lot of great name recognition, a lot of really neat contracts. The business itself, has opportunities to expand into other markets, which a lot of technologies are really constrained by their ability to cross over into new opportunities. And the ICGH really has that ability with the FanX just coming into the fold. So that's another piece of the business. And then the third, and we didn't spend a ton of time talking about the insurance side of it, but it's a really great time for us to really look at new products, new offerings. That being public kind of gives us an opportunity to share and expand. And so I think there's going to be some transition in that business as well. So as an investor coming in right now, you can look at the three revenue streams, and each one not only complements each other, but each one will be growing yearly. And as one spends some time, redeveloping some of its offering, the other two are growing at rates, that other companies don't. So I think we offer investors a lot of opportunity to see that growth happen, and in very, very short periods of time.
Mm-hmm. Fantastic. Thank you, Glenn. Looking forward, what should investors sort of pay attention to the most? Is there any sort of metrics to watch for, or maybe some form of catalyst that you think it's important to watch out for?
Yeah, one of the key measures that there's a couple, obviously. One is revenue growth for us. Annual recurring revenue is really important to us because it gives us good visibility into future planning, future performance. And if you think about in this space, in the marketing technology space, valuations are at 6 to 8 times annual recurring revenue. Not suggesting that's where ours is, but there's certainly opportunity for us as we continue to grow our annual recurring revenue to move the needle from where we currently are today. So I think those two are really important. I think, our margin will continue to, improve on our margin. So that'll be another area that, is a good metric, to keep an eye on as well.
Mhm. I got a question that came in regards to the share structure, and I don't recall. Do you guys have any warrants outstanding?
Yeah. So when we did our offering, it was one unit was equal to one share and one warrant at the time. So there's call it 1.2 million warrants, somewhere in that neighborhood.
And do you recall the exercise price of those warrants?
Yeah, it was $1.20, I believe, at the time. We went out $1, so $1.20, and they had a 4-year expiry.
Okay, gotcha. Okay, fair enough. Perfect. Well, listen, this is fantastic. Opportunity to get to know the business a little bit better here. But Duncan, what's a key message you want to make sure everybody walks away with today?
I think, as an investor, we're an exciting company. We're in a really exciting space. We're a real business. We're driving real revenue. We're, coming out of a year of a lot of expense from acquisitions and obviously going public. So, that's starting to get out of our system. We think we have a really good growth path ahead of us, and I'm hopeful that I've piqued your interest. We have a great management team, so I'd love to open the dialogue. If you're not an investor today, let's open the dialogue and start, looking forward and seeing how you can become part of the journey. I appreciate everyone's time, and yeah, I look forward to 2025. Remainder of 25 and 26. We have our reporting at the end of November. So keep an eye for our next quarter release.
Fantastic. Well, Duncan, appreciate us being one of the first groups getting an opportunity to see you speak like this and present to us. We've been speaking with Duncan McCready, CEO of IC Group, symbol ICGH on the Venture Exchange. Gentlemen, Glenn, Duncan, and Fraser, I know you're there. Thanks for joining us today, and we look forward to the next time we can catch up.
Thanks so much, Paul and Trevor, and your gang. Thank you.